What is good, everyone? Hope all of you guys are doing good. Hope all of you guys are feeling good. And surprise, surprise, we are getting some fireworks. Surprise, surprise, we are getting some fireworks. Let me send the stream to everyone. Doing a short public live stream right now. Boom. Okay. And then on X as well. Okay. Okay. What is up, everyone? I hope all of you guys are doing good. Seeing lots of familiar names in the chat as usual. Great to see you guys immediately tuning, showing love, showing support. We're going to have a quick, absolute cooking session talking about overall the current market environment, my expectations going forward, and basically how I am going to be playing it these coming days, what I'm going to be looking at in the weekend as well, since we got to be aware of the low volatile days nowadays. Since I told you guys this morning, if you are inside of the VIP Discord, I was telling you guys how June or July and August, from a yearly perspective, are very low volatile months, since people are on vacation and banks and institutions are also chilling, partially. Plus, at the same time, usually Saturday and Sunday are low volatile days when you look at it from a weekly perspective. And obviously, when you have a New York session that is closed, you can add Friday to that low volatile day as well from New York on going forward, because the session is closed. So I told you guys this morning inside of the VIP Discord in the London stream of we're either going to be getting an extremely slow and just nothing day where just nothing happens, or we're going to get the complete opposite, where we actually have a volatile day where lots and lots of price action is going on and lots of price action is there to unfold, which is what we're currently seeing, right? So we're going to be diving into the charts, do some Bitcoin, do some majors, do some preparations. It's been a while since I have done a public live stream. So if you have any questions, make use of my time. I don't do public live streams that often because my primary focus is inside of the Discord. And I'm also a one-man army, which is time limited. So also building the TCT Mentorship 2025, which is coming very, very, very soon. I'm just, perfecting some tiny little things, which is going to be game changing, guys. I'm telling you, it has everything that you need to know. The TCT Mentorship 2024 is already enough. The 2025 is an advanced continuation. So that's going to be coming very soon, but it will be a pre-release inside of the VIP Discord. So I want all the premium members to have access to the knowledge prior to the public. I want them to be able to study it, practice it, understand it, and master it And when they are fully prepared and are already benefiting off of the provided information, only then will I be releasing it on my YouTube as well. So we gave the people some time to be tuning in. Running on around 500 people. They will increase as the time goes on. But let's start cooking right here. Okay. Now, bringing you guys up to date with my current positions in the market. I posted on X how, I have been buying spot in extreme discount, but from a leverage standpoint, I still need to see 10 to 20% corrections across the board, just because I don't have my high time frame, high probability TCT accumulation model confirmations. And for that exact reason, I was also like, yes, we can go higher from here, but I would prefer to go lower first in order to get those proper swing long opportunities. Lots of pairs were actually developing in a similar fashion as Popcat is developing right here, where basically if you zoom out here on Popcat, what you can see is you had this Model 1 accumulation right here, the 9th of April, beautiful Model 1 accumulation, got the expansion towards the upside, where basically within that expansion, you also built some liquidity below, where you can see on each higher low, you kind of had that grinding up phase where you were building higher lows before getting that pop-up effect. Same over here in that consolidation phase, building those sell-side liquidity lows before getting the second pop-up. And then basically ever since deviating the all-time high on BTC, we have just been grinding down, taking all that sell-side liquidity. And, we had two support POIs. We had this as our structure demand, because in the upper section, you can still see that inefficiency. However, this right here, this block got recovered almost 80%, I would say, of the entire block, closing bearish candles deeper inside of the block. So when you have a block that in the discount section of that block has sell-side liquidity and you start closing within it, you can expect that sell-side liquidity here to get taken, especially when you have high time frame structure demand, actually high time frame market maker demand at the bottom, which is basically the structure demand right here created in the third tab of your Wyckoff TCT Model 1 accumulation schematic. Okay. So right here, you can see that weekly structure demand in that sell to buy that created the third tab of the accumulation, which is market maker demand, simply your usual demand POI located in the third tab of a TCT model. And basically what we were doing is we had this individual low. And this is super crucial, guys. This is super crucial to understand. We closed deeper in this demand and we had an individual low. What do I mean with an individual low? We just went lower and bounced. We did not have a consolidation period. We didn't have an accumulation. We did not sweep the low. We just had an individual low and we bounced. An individual low that closed deeper in this demand with sell side liquidity below. Oh. Okay. Are we all good? Is the stream all good? Because I got a pop-up from like an error. 1 in the chat if the stream is all good and there's no issue. 2 in the chat if everything is even better than normal. Stream is all good. Okay. All good. I love it. So we had an individual low right there that closed deeper in that demand where sell side liquidity was bound to get taken. So when we were going up here, right? When we were going up, I was simply looking at what the structure was doing and what the liquidity was saying. Okay. So what I was seeing here is that on a higher time frame, obviously, price is still simply trending down. We're right here from top to bottom on the daily. We are making lower highs and lower lows. And right there is our market structure high following the 6 candle rule with that supply block backing up that daily market structure high. And then from a supply standpoint, we had also some more supply located right here in the shape of not only I think it was an order block. Yeah, the 6-hour order block right there, which was also valid on the lower time frame as structure supply, where you can see that clear structured move before the expansion towards the downside right there, leaving that fair value gap. Okay, that's very crucial. That confirms the structure supply as a whole. And then below that, we can basically see nothing but a buy side liquidity curve. So we can see this curvature down where price is curling down, taking the lows, leaving all these highs intact. And this is that individual low I'm talking about. This is the low on that Sunday when it was regarding the Elon and Trump beef, where price were dumping down on a weekend where the markets were closed. And then we got that expansion towards the upside. But it was just a low. Like on the lower time frame, you have a sweep, but on the higher time frame, it's just a low. And what we were doing is we were coming up right there, and we were sweeping all that buy-side liquidity right there, which is that curve, which is obviously an amazing opportunity for the market makers to fill their shorts if that is what they are intended to do. And basically, following the market structure from the low up after putting in that individual low, we had a low, we had a high, and we had a higher low for a higher high right there. And then when you're trending up from bottom to top, you can pull your range from top to bottom. And then you have this range formation. So basically after that, I was looking at this range, and initially I was looking at it from a model 2 perspective, but that was a bit sketchy. So I was like, okay, a model 1 is the best, since above that high right there, we have a resistance POI that price can tap into, making for a potential nice model 1. And then if that happens, we're going to be looking for shorts. Now, we got this move up here, and this is a fairly aggressive move towards the upside. If you guys pay close attention to my streams, you guys should know that usually I like these slower moves into my third tap, creating that high quality return to zone so that price can have an easy flush. However, when you're trading higher time frame models, and technically speaking, this is a daily distribution model, because you can draw the 6 candle rule in between these taps here with the move down, the move up, the move down, and the move up. So when you're trading these higher time frame models, you can be a bit more flexible regarding the return to zone, because what will happen here, and this is me talking from experience, that if you put in that third tap and you have a nice topping pattern and you get that move down, looking back, you're going to think to yourself and say, oh, that was an obvious looking model. But then in the moment, it's a bit harder, right? It was very similar. ETH was a very similar example where in the moment it looks sketchy, and only afterwards does it look clean. So looking at ETH here, when we're referring back to that model 1 distribution at the highs there, you have a super aggressive move up. Now, this didn't have a proper confirmation for me in general, but let's say this had a clean looking topping structure with an easy breaker structure confirmation, then, you have an aggressive move up right there, but it's the higher time frame. And then the moment it comes down, you look back on it and you're like, that's an easy trade. So the only extra requirements is the fact that because you have a good aggressive move up into that third tap, you need your own topping pattern. Okay. And with topping pattern, I don't particularly mean like TCT and TCT. I just mean a good topping formation from a candle structure perspective, a candle formation. So right here, if you put on your bars, these are good looking highs. Okay. So if you form a high that looks something like this, on let's say the 4-hour, this is a good looking high where you have your individual candle high. The second candle takes out the previous candle's high, closes back to bearish, and then the third candle is a lower high for a lower low. This is a very good looking high. You can also have it, it's basically a model 2 distribution with your 1, 2, and your 3, but then from a candle formation perspective. And therefore, you can also have it from a model 1 perspective where you have your candle going up right there, open, second candle goes higher. It can close bullish, can close bearish, doesn't really matter. Third candle goes up and takes out that high, and then you close back to bearish. When you have these formations, the 1, 2, 3, and the 1, 2, and 3, expectational order flow for the fourth candle is a lower high for a lower low. And right here, lower high for a lower low. So that's just a little quick lesson on just candle, topping and bottoming formations, because for a bottom, it works the other way around. So what I was seeing here when we were at that high, and this was yesterday, because we did have to take a small L before getting the potential W here, was that we had this, we kind of had TCT and TCT here. but there wasn't really an entry on the lower time frame. And then we got the break of structure right there, got the break of structure retracement, and we created this supply. And this is actually where I opened my first short right here, when we were breaking structure right there back to bearish. And then on New York Open, right there, on New York Open, we got that push up. You can see here where the orange candle starts on New York Open. We got that push up. We took the high, and we started breaking market structure back to bearish. So this is where my initial short was, where I was already targeting lower prices. And we did get the nice aggressive follow through towards the downside right here. They get that nice aggressive follow through towards the downside initially, but they had that super slow move up, and then Asia just popped up higher right there. Now, we already rejected from supply, so the moment we had this low right there, I throw my stop loss to here. So I lost like 0.25-ish% on that specific setup, which is really nothing that big. And in the morning, we saw that this could be, either a Model 1 simply going back for its LPSY from a Wyckoff perspective, or a Model 1 going over in a Model 2. Doesn't really matter. We saw the break of structure. We saw the retracement. I think my entry is at somewhere in here, 192. Stop loss above that invalidation, which is a super clear invalidation, and then simply targeting the lows right here, where we're targeting the Wyckoff lows based on the Wyckoff Model 1 distribution. But preferably, I want price to come down towards that high time frame demand, because that is where we can look for high time frame accumulations. And then we can also sweep all this liquidity right here on the left, okay? Sweep all that liquidity on the left, which will fix a lot of issues. Now, what I also like about this trade is the fact that, even if prices are intended to go higher, you can get pullbacks here, which is nice. But you have a nice short open that you can take into potential longs when the time is right, okay? Because switching to Bitcoin right here, Bitcoin is kind of in a tougher spot for me personally. Going really from macro to micro, basically what we have is we have this high time frame range, which could be a high time frame distribution with a 2-tab model going on right now. But the second tab, as of now, has failed to deliver any proper follow through towards the downside that managed to break some kind of structure. But you have this macro range going on here, which is represented with the red dots. And then you have your mid time frame range going on right here, which is represented with the blue dots. And initially speaking, my best case scenario, right? My best case scenario was for price to get, this distribution right here. We were looking at the Model 1 distribution. My best case scenario was for this distribution right here to send price lower into the third tab POI based on the mid time frame accumulation with your 1, with your 2, and with your 3. And then trade that mid time frame accumulation into your third tab of your higher time frame distribution based on the 1, 2, and the 3 right here, to then top out and go lower. That was my best case scenario. But what kind of messed it up was that price got a move down, but the move down had no follow through. Right? USDT dominance was already hitting resistance levels, which is bullish for Bitcoin, obviously. And then Bitcoin V-shaped back up, took the extreme liquidity within this mid time frame range right here, which were these triple equal highs right there. I was watching them literally yesterday during New York, right there, triple equal highs. And we took that without taking the actual extreme liquidity of the macro range, which is obviously located at the exact range high. So we still have buy-side liquidity above us, but we're basically in this situation where I'm like, okay, from a market structure standpoint, following the most recent range rotation, you kind of have a Model 1 distribution right there, went over in a sell to buy, and you could expect a potential higher low for the higher high. Like market structure of the most recent rotation in the range is pointing up, right? If you simply follow your 6 candle rule from the low here, you have a high, higher low, and a higher high. And you could do a higher low for a higher high right there. Again, since you have that buy side liquidity above you. But at the same time, you have a very nice topping pattern right there, where also on the daily, you're trying to confirm some sort of a very nice high. Like I was just referring to you guys, if you can have a high and then the second candle takes out that previous candle's high, And then the third one is a lower high for a lower low with nice, a nice closure with a good body, which is currently developing right there, 1, 2, and a 3. Then expectational order flow is a lower high for a lower low. Right now, we still have 6.5 or around 7 hours until this candle closes. But on the 4-hour, we did already break some structure here with just a model 1 distribution backing you up right there. So now you have a model 1 distribution and you have higher time frame structure supply getting overlap in here with that lower time frame structure supply. And we're currently bouncing up the only demand POI created in that most recent swing. So we're literally at the equilibrium of this swing right there. And the question is, are you going to get a lower high for a lower low, or are you going to get a higher low for a higher high? Where my preference would be a lower high for a lower low, complete the distribution models across the board, and allow for higher time frame swing long opportunities upon high time frame key level mitigations. Okay, so that's my preference, but we have to see what's going to happen here. Now, obviously, market structure will tell you exactly what you need to know. If you go up right here and you break your structure in that local move up back to bearish, you're going to get the lower high for the lower low. If you go up and you never get this bearish break of structure, then you're simply going to reverse it back up. Because if you manage to close above this supply, it's going to be a very easy way back up to this high, because there's nothing but buy side liquidity above that local supply zone. So, we're literally, this is the only proper, order block in that period. You have some demand lower, but overall it's a very fast move up, and we're at a decisional point right here. It's just that due to, different altcoin pairs looking like this, I just prefer a move down, taking everything out. In this case, it will be a pretty aggressive move down on Popcat. It's 30%, but it does allow for macro long opportunities. So, we're in this decisional point at the moment, also with ease topping out and rejecting there, where I'm like, okay, we could be going over into swing longs, but then we do need a bit of a drop first, where I would say APT is like one of my favorite pairs here at the moment from a potential long, high time frame swing long opportunity standpoint, where you have your model 1 accumulation, you already got the breaker structure back to bullish, confirming the model 1, and we're simply leaving behind this daily order block right there, where we can look for a model 1 going over into a model 2. And the way that we are just pulling back here is just absolutely incredible. Absolutely incredible pullback here with this high. Literally, you have a high right there that has some sort of supply. And besides that, you have lower high, lower high, lower high, lower high, lower high, some local highs in between the main structure points. It is a really nice pullback at the moment. So I am at the same time looking for a swing long if we can manage to form a bottom formation in here, or just some better structure, allowing for an entry. But that's already very close to current market price. So you're kind of, if Popcat is going to be playing out, then this is probably going to be disrespected, because this is already max 10% away from mitigating the extreme of the extreme, and Popcat has a potential 30% move still left in the tank, right? If we want to mitigate high time frame key levels. Now, I know some people like to look at this from a potential new range right here, where this is going to be your new range, and you're simply looking at this from a market structure standpoint. However, guys, I want you to understand that if you have a range starting point that had a compression, that is 90% of the time your range starting point. Even if your second and your third tap have like bigger time displacement than the first and the second, if this was a clean compression, which is basically compression is building higher lows while building lower highs and then selling off, this was already part of your accumulation. It happened. The exact same thing happened at Bitcoin around 70K, right? Bitcoin at 70K had the exact same thing, where right here you had the compression. We actually traded it, right? We traded this compression right there, looking for a model 2, but right here we had the compression where price was making higher lows while building lower highs right there. And then we were looking at this for some sort of a 1 of a 2, and at that time a narrow 3 right there that we wanted to take into a higher time frame, model 2 long, and then we went lower right here. Again, time displacement between tab 2 and tab 3 was bigger than tab 1 and tab 2, and I was also tempted and did repull my range from this starting point right there. But what that causes is for this to be a very awkward tap right there, and for here still having the opportunity of a chance of price going lower before going higher, which can hold you back from going fully risk on where you need to. Whereas if I kept looking at this from a model 1 accumulation standpoint, then things became way more clear, because then this could be a model 1. And do you see this awkward higher low? Well, what do you guys think this awkward higher low is? This awkward higher low is the test of your Wyckoff model 1, which is supposed to be an awkward position for price to be in, right? But you're only going to get that clarity if you looked at it from a model 1 perspective initially. So I really like to look at this from a model 1 perspective, and then simply look here for a potential play. And, I'm highlighting this range right here, which kind of has a TP target of $7, which will be just a heavy TP as a whole. But if we go full blown all season mode, right, in just a potential scenario, then this could be, TCT in TCT on this high of a time frame, and you could actually get a rotation back to around $20 right there. But that's only best case scenario, full blown alt season mode, Bitcoin dominance starts dropping aggressively, only then. Okay, so I'm definitely liking APT right here, but I'm, like I just said, kind of figuring out what the chemistry is going to be in between, an APT being around 7 to 10% from already, fulfilling high time frame key demand levels, versus a Popcat, which is what we're currently short on, that still has way more room to go down if we want to mitigate and sweep ourselves of liquidity and mitigate high time frame key demand. And the same actually also goes for a Pepe, for example, also has the exact same model 1. I shared last night inside of the VIP Discord. Literally, I was talking to everyone how I would love to get a low time frame TCT entry right here up on that supply mitigation for the high time frame target. Preferably, I would have loved to have a bigger range formation in here, right? I would have loved to have a bigger range right there for just easier entry opportunities, because this was very low time frame. But the reason why I was more fan of a lower time frame entry in these current market conditions is because if you have a lower time frame entry right here, which was definitely present, unfortunately, when I was asleep, you can enter with a very tight stop loss, and the moment you take that low, you're already up 2.3%. So you can take a 25% take profit and already be de-risked, right? Already be de-risked. So you can take a 25% take profit, keep the stop loss the same, and if you get stopped out, it's a break-even trade. And now you can target this low for still well of like a 10RR move in a de-risked position. Like on Popcat for now, for example, I'm still risking my trade. I haven't taken any profits. I'm still simply sticking to the plan, but I cannot move my stop because my stop is located above this Wyckoff high, which is the invalidation, and I have supply levels backing me up. So price could, technically speaking, do something like this, mitigate supply, and then still go lower. Whereas on Pepe, right, I'm already de-risked. So I would have preferred to catch a low time frame entry for a high time frame target when I'm not completely sure of my surroundings, but I was asleep. So what else can you do about it? Okay. So, you have different pairs here developing distribution models. Also, Pepe right there, same story with that individual low. It's just, it's beautiful. I've also, by the way, guys, you need to be paying so close attention to what I post on X. Any charts that I post, I'm not going to be pushing a swing long opportunity down your throat. Okay? That's what I do in the Discord, right? That's what I simply do in the Discord. So that's where I'm like, yo, reminder, and reminder. Okay? In my public X, I'm just posting it once, and the people that pay attention set alerts and pay attention, and the people that don't. Okay. So if you remember, because now I'm going to remind you guys, I've also highlighted Cardano here on my X profile some time ago, I think a few weeks back. And basically what we are having is just an individual low. We have this high time frame range formation with high time frame key demand. Now, how did I find this key demand? It's basically this weekly structure demand right there. So you can see we're making lower highs and lower lows. And we have this aggressive break of structure back to bullish, very aggressive expansion towards the upside, leaving a massive inefficiency. So therefore, valid weekly structure demand. But on a lower time frame, if you zoom in right there at that market structure high of that weekly structure demand, you can see this overlapping effect, where on the 2 hour you have this 2 hour structure demand overlapping the weekly demand. Guys, what this indicates is that this 2 hour demand has the strength of the total demand because it's overlapping, but it's just highlighting where the true inefficiency is taking place. So initially we thought that this is already inefficiency right here, but you had that wick prior. So the actual inefficiency starts from this high, because after this high, that's where you can see nothing but a fair value gap pushing price higher right there. Okay. And where you have those true inefficiencies, this is where you have those, I like to call them logarithmic reactions, just algo reactions. When these true inefficiencies get filled, they tend to react. So when they overlap with high time frame demand and you get that overlapping effect, bro, this is high time frame key demand. Now, we have high time frame key demand below the range low. Look at that high time frame key demand as the fuel that is needed in order to get the expansion. There is a reason why price hasn't gone up here. There is a reason why we've just been consolidating. It's because it's waiting to generate enough liquidity in this range so that when it gets the aggressive move out, it causes 1, enough breakout sellers, plus 2, enough liquidity grabs from a stop loss perspective, and 3, a demand mitigation. That's what is needed in order to have an expansion towards the upside. If you just randomly go up from here, like let's say price is right there, why would price randomly go up from there like this? What was the purpose of this if you just randomly went up there? Why did you not go up right from here? Why did you not get the aggressive expansion up right there? Why did price pull back? It's because you want to accumulate. You need that fuel in order to get the aggressive expansion. And price had equal lows there, so it simply wasn't ready. So what we have right here is a high time frame ranging environment, okay? Where if we follow our swing structure from top to bottom, you can see that price is making a low, a lower high for a lower low, and a lower high for a lower low, and then boom, you had a wick right there, which is not a market structure break, and you simply went lower in the ranging formation here at the moment. Where this push up right there was based on a strategic reserve news announcement, okay? Biggest trap that you can get. And ever since that correction, we have just been ranging in here. Like this has been nothing but a range. So following that high time frame downtrend, we can pull our range from swing low to swing high. And that brings us to the current range that I have on my chart that has those equal lows below and high time frame key demand below. But that's not the only thing, okay? That's just the first part. If you zoom into this range, one thing should already catch your attention immediately, okay? One thing should already catch your attention immediately. And that is the fact that there's no price action, literally no price action in the premium section of the range. And it's not that I'm pulling an incorrect range here. No, it's the valid range following swing structure. And you have a massive inefficiency above. Not only a massive inefficiency above, when you zoom in, you can see that this move right down, or this move right here down, is just a lower high, 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 lots of lower highs. And even zooming into here, This may seem like a fast move down, which it is, but looking at it, if you zoom into this region, you have nothing but liquidity. You have a high, and all these are lower time frame, lower highs, stacking up, stacking up, stacking up, stacking up. You have nothing but buy side liquidity above you with a massive range inefficiency. Now, I'm not going to spill all the VIP secrets, but you guys know that's a pretty damn high probability environment if we get the confirmations. So you have the range inefficiency, you have the return to zone. Okay, what you need now is a move down, at least sweeping the initial range low, and then preferably also mitigate the demand. But that could also be on like the second attempt from a model 1 perspective, where you do something like this. But if you get a TCT accumulation model in here, that is going to deliver such an aggressive and fast expansion. I am personally getting XRP vibes 2.0. Now, don't get me wrong. I am not bullish on Cardano from a spot trading perspective per se. I'm just talking about this most local range rotation, where if we get the confirmations, you're going to get from point A to point B extremely fast. Okay, if you get the right confirmations. But in order to get the right confirmations, you then again need that correction right there, where this correction is 11% towards the range low, or it is around 20% towards the high time frame key demand, which would preferably you would preferably want to see that get triggered. That's literally why I have been posting on my X talking about, hey, I have some spot orders, some spot limit orders, and just leverage limit orders 20% below current market price. Surprise, surprise, it's at high time frame key demand levels. It's not at ADA, okay? It's not at ADA, but there are multiple other pairs out there, which I am encouraging you to go and identify yourself if you're not inside the VIP Discord. And on certain pairs, I do have leverage long limit orders that I'm looking to scale in the second tab and then trill it into a potential third tab. Am I at risk of getting stopped out? Of course. And then if I'm wrong, I'm wrong, and you have a losing trade, and that's simply it. Okay. But I want you guys to understand my thought process. I'm short right now, trying to take the short towards all these high time frame lows, which then I'm looking to take that into high time frame accumulation longs. Now, I don't know exactly how that is going to be correlating to Bitcoin. In all honesty, I don't know. I don't know. I don't have my confirmations right now for the altcoins to say we're going to get an expansion up super aggressive. But let's say I do get my aggressive long confirmations on altcoins. I don't know where Bitcoin is going to be. We might still be in this range. Maybe we have retraced all the way down to this level. Maybe we're consolidating in here. And then, in the move up from this swing low to that swing high, we get an outperformance. We start consolidating in this region for some sort of a PO3 / higher time frame distribution. And then in this period, we get an outperformance. I don't know. Okay. I also do not need to know. That's the biggest thing. I'm simply going to be looking at ETH BTC, total 2 and total 3, and Bitcoin dominance. Okay. If I get my confluences on those majors when I'm looking at my swing long on altcoins, that's when I'm going in. Okay. That's when I'm going in. But I don't know what Bitcoin is going to be at that specific time. But I also do not need to know, right? I'm just trading the charts, trading the confirmations, and then if we get that swing long opportunity, we get it. If we get the move down first, that is going to be more bullish later on, okay? If we get the move down first, that is going to be more bullish later on. If you don't grab the fuel necessary to go up, then how aggressive is going to be the move up, okay? That's what I want you guys to think about. Going down first is going to be more bullish later on. So also, it wasn't that I was particularly that excited about the Popcat short. I just had to take it because it were my confirmations. It's literally that simple, guys. It's not that I'm like pre-planning this setup and I'm like, I know that we are going to go down there. There was room for error, 100,000%. But the difference is that I've been in this environment so often where I know things look better in hindsight. You got to realize that in the moment. And then when you see the confirmation, you just take it with correct risk management. It's that simple. Because if this trade plays out on a 5.4 RR, and I'm risking about 0.7 on this, I'm up 3.5% on an individual trade. I can take that 3.5% risk and throw that back into the long if I get my high probability confirmations. And then we're talking a 3.5% risk on 10, 20, 30 RR entry opportunities, leading to just like 2x's in your trading account balance, which is, trust me, those opportunities don't come that often, but when they do, you want to be prepared, okay? And that's what I've been preparing everyone for inside the server. I'm like, if they come, they come. It's an if scenario, but if they do, you got to be prepared. And therefore, the biggest difference is that all the people screaming for a breakout, Bitcoin right now has been rejecting like 3 times at the same high, right? We had the 4 times basically. This box right here has just been your rejection POI. You came in it once, twice, 3 times, and now 4 times. 4 times people are calling for a breakout. 4 times alts are getting wrecked. Bitcoin is maybe chilling here, but people are not chilling in Bitcoin. They're chilling in altcoins, hoping for an alt season. So all the people screaming for a breakout have been wrong 4 times now. So remember that when the 5th time comes, and maybe then we actually do get the breakout. They mess up all their profits, anticipating on the breakout, FOMOing into positions instead of pre-planning ahead, buying in red, and then they lose all the cash on the correction by FOMOing out, and now they're not even ready or have any guns and bullets left to benefit off of the actual move up when the time is there. So that's why it's so important to follow traders. Literally, you don't know if there's going to be a breakout. You're trading the range. If you see any smart money concept trader purely calling for breakouts, it's just for engagement. Because even if they talk about, oh, high time frame is more important than low time frame, you're wrecking your followers. Because if you're anticipating a breakout 4 times and screaming breakout, breakout, breakout 4 times, 4 times people are still going to be buying because now could be the time. So, it's important to trade the range until the range isn't tradable anymore because you get the breakout. It's that simple. It's way better to anticipate for a fake out, which happens way more often than a breakout, And you guys should all know, obviously, that for me, I'm expecting this range to be some sort of a macro distribution. So, any move inside of here is for me just manipulation and trading it from a range deviation standpoint until proven otherwise. Right there. Okay. Just as a fresh reminder, following the market maker manipulation playbook, purpose of the move up is to be distributive and not to be from a breakout standpoint due to the obvious buy side liquidity sweep right there with the front run of high time frame key demand and obviously already seeing the second tab getting created, etc. I'm checking the chat at the moment. BTC is an order block with if at 1-day chart possible an accumulation. I have no idea what you mean with your question, brother. The ranges are all displayed right here. Ranges are all displayed. Bitcoin dominance is just going to be very important, right? This is going to be your most important indication for altcoins, okay? We could be potentially getting a Model 1 distribution here, but I told you guys, if we get the level 2 break of structure, which is currently right here, we can get the rotation down to level 1, which is what we got. We went down to level 1. but at the moment, we are not breaking level 1 yet. And this may seem very innocent, but for the people that were already anticipating on the long, this tiny move down, or for the people that were looking for a short, this tiny move down led to 20 to 30% expansions across the board. So we had a lot of shorts pre-planned, which are basically unfolding right now. But lots of shorts also got or did not get confirmed, or got confirmed but got invalidated, which we did not take because, like I said, I was anticipating on this move down. And this chart is super valuable, because this tiny move down right there led to 20 to 30% expansions across the board. So just imagine what happens if you actually get a proper move down. Okay. Now, so far, no level 1 breaker structure yet. And we do obviously have my max POI from a resistance standpoint, which is going to be 67.66. This is the only true inefficiency created in the entire move down. All of this is buy-side liquidity. Only here do you get your true inefficiency with multiple actual structure supply POIs being part of a supply chain. So coming into those high time frame key demand levels, while Bitcoin dominance comes into 67.66, or just, a bearish breaker structure at least, is going to be an amazing +1 confluence. There's a 1 week hidden OB on ADA that aligns with the high time frame key level that you pointed out. Hey, more confluence is more confluence, so that's only extra +1s is always better. Blanquito, it ain't pretty, but XRP already confirmed the Model 2 on the higher time frame. Indeed. And there are always going to be some pairs that just have different price behavior compared to others. So we pre-planned. I pre-planned this swing long in my public X. Guys, I'm telling you right now, if I post a setup on my X, I am so super confident. You need to set your alerts and put it on your radar if you're not inside the VIP Discord server. Because if I put it on X, I'm super fucking confident. The only problem was that we didn't get my proper confirmation. So we went down to, I said, a minimum sweep of 1.922. Okay. 1.922. We swept 1.922 right there, which was at extreme liquidity. But we front ran our high time frame key demand, which was right below it. Now, that's okay because you don't need to mitigate it if you already sweep your liquidity. It's just that the entry here was sketchier because it was like, okay, on the lower time frame, you had a breaker structure right there. But on the higher time frame, it could still be a lower high for a lower low like this. So you were kind of fighting your black market structure pool versus the red market structure pool. And then what happened as your decisional point, making it super sketchy, is getting a, I think this one higher actually. Yeah. So what made it super sketchy is that you got a bearish breaker structure, which ended up being a fake break to mitigate demand to go higher. So this was that decisional point on Bitcoin as well. But it was super hard to enter on, like super hard to enter on. So I am not positioned in that setup. Especially like if this mitigated demand, I would have more confidence. But because there was still a reason to go lower, I was like, maybe this turns into some sort of like a TCT and TCT formation right there in this ranging environment. But we end up going higher. But the difference is, right, what I want you to understand is that I want you to compare this range to a range on Doge. Okay. I want you to compare this range to a range on Doge, because then you're clearly going to be seeing the difference here. So looking at this range, basically when Doge created its own one, like its first and second tap, like this right here bottomed. So XRP bottomed when Doge was still right here. And Doge aggressively trended down lower right there and basically created the range right there with your 1 and your 2. Where this second tab was also the second tab right here. It was just that the first tab already was created when Doge was still right there. So XRP bottomed prior to Doge already. Then Doge got an aggressive breakout right there, going higher. Is currently retracing all the way back down, but in that move up, XRP simply stayed in its own range. So now when Doge could be coming for these lows right here, right? If Doge comes for those lows right there, and we start accumulating, it could be that on this move down, this already bottomed out right there. The same way that we bottomed out right here when Doge was right there, Doge could be coming for these lows to create a high time frame accumulation. XRP could already be bottomed out. So it just kind of has its own little characteristics that I want you to understand when you're trading these higher time frame models. This bottomed way earlier, and therefore this could already be the third tab way earlier compared to other pairs. Now, best case scenario is obviously creating some sort of a move down into your extreme demand for like a TCT and TCT entry, which you can always send an alert at that low, but it's definitely not guaranteed. Okay, it's definitely not guaranteed. I would say of all the pairs that you can short, this will be one of the worst pairs to short because it's the only pair that's fighting against an actual confirmed accumulation versus a Popcat that has an individual low with no accumulation backing you up, you know? So if we get any low time frame accumulation models in here or just, I know, moves downs into like the extremes right there, I would also look for TCT and TCT, but it needs some time. It needs some time. Best case would have been to mitigate the demand as well, but as of now, there's no entry. But if there's going to be low time frame entry, I'll be there because if we get a move down and we get a low time frame TCT model, we can get that. For example, what I mean with that is, let's say we get that move down into this demand level, okay? Because you already have a valid model too. And we see some sort of TCT and TCT here. So you actually go down, you go lower, and you get your proper, let's say, model 1 accumulation schematic. Like if you get something like this, what you simply do is you find that low time frame entry right there on a low time frame breaker structure, put the stop loss below that third tap, and now you have a low time frame entry for a high time frame target, allowing for super high RR entry opportunities. And simply at the technical target, what you do is you just de-risk the position. So you take a partial profit, you de-risk the position, and you let the rest run for that high time frame target right there. So either I'm looking at something like that, or maybe a move into the demand for a better third tap. But it could also already be bottomed compared to other pairs because it bottomed at the first tab also earlier than most other pairs. So I just want you guys for now to understand, okay? I want you guys to understand that we are in a situation where you don't want to be anticipating, you don't want to only wait for all these high time frame key levels to get grabbed because other altcoins did already put in second taps that grabbed high time frame key levels, like an APT, for example. So buying spot in that extreme discount, having your invalidations below those high time frame demand levels, anticipating on the potential push up with Bitcoin dominance then dropping, that's good, right? That is good. You already want to be scaling into extreme discount and sell at extreme premium. On spot, you do not need to cash the exact bottom, okay? That's how most people get wrecked. However, when you see those individual lows, what you can now do, when you see your distribution confirmations, you can hedge your spot buys very easily with shorts on the high probability distributions and take those shorts down into those key levels if we get there, and from there look for high time frame swing long opportunities. That is going to be my play, okay? That's where I have my focus. I don't know what Bitcoin will be doing in the meantime. I'm not that interested. I'll be using Bitcoin from an intraday perspective to determine. And obviously, if I see anything high probability to develop on the mid and the high time frame, I will pay attention and put importance on it. But right now, we're kind of in this environment where I'm like, I know if you're going to get the higher low. I know if you're going to get the lower high. Time will tell. I want the lower high to get the move down on altcoins, the spike on Bitcoin dominance, and then reverse long everything into fucking outer space, bro. You're either going to get the most generational swing long opportunities or you're going to get a loss. That is it, right? No big deal if it's a loss. Very big deal if it's a win, because that win, that RR is going to be disgusting. I can already tell you that right now. That is going to be disgusting. Macro targets also don't matter. I'm seeing FBB or FBFB ask, what's your macro target? I don't care. I don't know. I don't need to know. I'm going to sell. I'm going to buy low, sell at resistance higher up, be risk off, take profits along the way. And when I see Bitcoin top out and I see Bitcoin dominance potentially hitting support, I will cash out with a distribution model on your altcoin, and I'm out. But I'm not really a guy that talks about macro targets, because using my TA, I cannot give you a target particularly higher than a new all-time high or just a new market structure swing high, you know? If we're looking at Doge, right here, let's say you get the craziest swing long here, okay? Let's say you get the craziest swing long. If I would give my max target based on my TA, if we get a crazy swing long here, I'm looking at nothing. Like, my max target will be this high right there, because that is heavy market maker supply. And whales decided to sell price off there aggressively. The people that are the OGs know how legendary that short trade was based on that Model 1 distribution. But hey, I'm not looking anything further than that. Literally. Could it go higher? Yes. Can I predict that? No. Could we also come here and reverse? Yes. It's more about managing the risk and letting the markets decide your profits than focusing on the profits and having a fixed target in mind. The entry is extremely important. From there, you manage risk, and then you let the markets decide how high they want to go. Take some partial profits along the way, and if you get your exit triggers, you get your exit triggers until your max target gets hit, which would for me always be just like heavy supply around local highs from this cycle. It's so good to see people on X getting impatient. They will likely fall at the final hurdle. Bro, guys, I've been seeing news articles. Literally, I've been seeing news articles. I've been seeing news articles regarding how, from Bloomberg, right? From Bloomberg. That shit makes no sense, bro. At this stage in the cycle, you have Bloomberg talking about how altcoins lost $300 billion in value compared to Bitcoin, when they never post or not really have a focus on crypto posts, when we could potentially be bottoming out. Every negative post that you see regarding altcoins is a +1 confluence to your swing long. Sentiment like that is not an exact reverse indicator. It builds up. If you see that sentiment develop when your accumulation is developing, and then you have your third tap, and maybe the move down into the third tap is on a bearish news event. For example, the second tap on Bitcoin was, in this case, the Trump and Elon beef, right? That is perfect. That's all that you need to know. Like, that is the biggest +1 for your long. Literally the biggest +1 for your long. So I want you guys to step outside of the box and realize that they are not promoting crypto or making those headlines and articles in benefit of retail. They want to fuck retail over the same way that you see it on the chart, the same way they do it via news. Okay? So look at those accounts that have like massive following and only bull post at the exact highs as your sentiment indications. I also have, it's pretty funny, I also actually have a WhatsApp group with like my family and like cousins that are like truly retail, where if they start posting articles about Bitcoin and altcoins, which are like good, I'm like, okay, we got to sell. And my dad recently called me and said he wanted to sell all his ETH because the shit wasn't moving, which is a pretty big fucking indicator, which is a pretty big indicator for a potential move on ETH, you know? So it's good to have some retail friends besides you to kind of memorize or remind yourself of what the retail mind is thinking like. Because once you start, seeing the bigger picture, it's very hard to go back into that herd type of mindset. Also, guys, I want to let you know, to everybody listening to me right now that is located in Europe, Bybit is moving back to Europe. However, Bybit will migrate to Bybit Europe. It's right now, it's Bybit Global. It will migrate, if you're in the EU, to Bybit Europe. I have a link in the description of this live stream, or wherever it is for you, what you're watching on, where if you follow that link, you can make your account on Bybit Europe. Okay, it's very important, because if you don't go to Bybit Europe, eventually you won't be able to trade anymore on your Bybit account. Okay, they're slowly closing everything. I think it ends in like August or something, that you can not function anymore. You need to migrate. Okay, so if you want to support me and you need to migrate, go and migrate right now. I think I have it in the description of this video. I'm not completely sure. But right now, leverage is not allowed on Bybit yet, but they are working on getting the leverage allowance also back, which I was in contact with the team, and they're actually making some decent steps towards that. So either way, Bybit on spot can still be traded, and it's good to have your money. Like, the best way to be risk off is to be diversified. It's that simple. Having everything on your own personal wallet is also risky. So having your money spread out over trustworthy exchanges like a Bybit, like a Binance, like a Coinbase, right? That's the best way to go risk off. Literally, to be diversified is to be risk off. So you can use Bybit just also as a store of value, to just have a part of your money there. I have most of my money on Bybit. No. Most of my money on centralized exchanges on Bybit. Okay, so I suggest you do the same. Blowfin is nowhere near the level of Bybit, and I think Blowfin is also non KYC, which is always a bit always a bit more sketchy than an actual centralized exchange with KYC and regulation. And bro, don't even talk about MEXC. You don't want to have all your money on MEXC, brother. Bybit. You on MEXC and Blowfin, you only want to put the necessary margin, allowing you to trade. Okay, allowing you to trade. You don't want to put more money than that you need on those type of non KYC exchanges. You can just use them for leverage trading, but if you start making money, withdraw that to your safe accounts. Okay, so just wanted to let you guys know that Bybit will be migrating to Bybit Europe. So if you have a Bybit account right now and you're in Europe, you need to migrate yourself. Okay, they're going to slowly close everything coming into August and maybe max September or something. So link is in the description. Click it, fill in your email, and it's done. Literally, that is that simple. Do you not have any cold storage? I do, but you don't want to have everything cold storage as well, because you never know, right? Diversification is the best way to go risk off. But guys, we have been going for an hour. I am working extremely hard on finishing the Mentorship 2025, which will be an advanced continuation of the TCT Mentorship 2024. So to everybody listening to me right now, okay? To everybody listening to me right now, if you haven't watched the TCT Mentorship 2024, everything that I just discussed and did TA on, and the trades that I'm taking, and the posts that I'm making, everything has already been given to you for free inside of this TCT Mentorship 2024. It is now going to be extremely important that you watch this, because 2025 will be an advanced continuation of 2024. Basically, in between the period of 8 months, I have discovered certain extra things which make it higher probability, filtered some other things out, and slowly just evolve over time, which is what 2025 will go very in-depth about. But it's going to be useless to you if you don't watch 2024. And if you don't watch it now, you're going to be behind a lot, okay? It's for free. It's on my YouTube. Go to my YouTube playlist section, and it's all there. 9 lectures from market structure all the way to trade execution with all the TCT schematics. So go and study this and put in the work. A year ago, we were already talking about how this cycle is a trader cycle, and the people that cannot do technical analysis are going to get left behind. And literally, that whole year has just been proving that statement more and more. Like the 365 days after that have just been proving the statement more and more. Okay, so go and study this, lock in, put in that work, and then once you feel like you're ready, you can join the TCT Discord. Okay, that's going to be the best step for you to do if you want to actually evolve in this game of trading. If you don't want to be dependent on what the market does, but you just want to be trading the volatility of that market, the VIP Discord is where you want to be. Okay, it's a live trading server with lots of educational material so you can learn why I do what I do. So you don't just have to copy me, but you actually understand why I do it so you can do it yourself. And man, slowly but surely, I'm noticing such a crazy shift in just critical thinking and technical analysis skills within the community, where people are truly leveling up. And the people that are leveling up right now, or are more at advanced level right now, are the ones that signed up at the beginning, literally when the Discord server was just live back in October, November 2024. So I'm telling you guys, it's possible and you can do it too. You just need to put in the work. You need to want it. It's that simple. But if you want it, in my opinion, there's no better place to be, especially for this last phase of the cycle. The entry opportunities that can present themselves, in my opinion, are going to be 2 more. Okay, 2 more. A potential generational run from a swing long perspective and a generational swing short if we're going into a bear market. Okay. So there are going to be 2 more amazing opportunities from a swing perspective, and you want to be ready. Instead of FOMOing into low cap meme coins that can do a 10x, you can actually get 30 RR entry opportunities, which is going to be better than your 10x spot investments. Okay, that have been down 80% ever since basically year to date, right? So put in that work. Don't forget to watch the risk management lecture, which is one of the most important lectures with the least amount of views. But go and watch the risk management lecture as well. And also the trade execution. Okay. Also trade execution. If you don't understand leverage, which lots of people don't understand leverage, go and watch this. Okay. We'll teach you everything you need to know about the use of leverage during the execution process. So the plan has been made. I've showcased you guys what I'm looking for. Okay. I don't have public streams that often. If you want to have 2 streams, 3 streams a day, you can find me inside of the VIP Discord, link in the description. And if I post anything on X from a setup perspective, I'm very confident. So set your alerts and be ready. Okay. I appreciate you guys. And to all the people inside the Discord, I will see you all inside of the server. Ciao, ciao, guys.